Starting with the weekly average weighted prime lending rate, we observed a decline of 9 basis points last week, settling at 11.78%. Dr. Veerasinghe during yesterday's monetary policy review highlighted that inflation might increase up to 7% in January, driven by factors like recent VAT hike and other external influences such as adverse weather impact on vegetable prices. The Central Bank of Sri Lanka is optimistic about private credit, expecting a growth of 100 billion rupees in December 2023. This follows a positive trend seen in November, where we witnessed a noteworthy 63 billion rupees expansion, indicating signs of economic recovery. Shifting gears to market liquidity, there was a deficit of 79.3 billion rupees by January 19 compared to the deficit of rupees 53.3 billion rupees recorded a week before. Now let's turn our attention to the stock market. The all share price index experienced a marginal drop of 0.05 points, settling at 10,274 today. Meanwhile, the S&P SL20 index saw a slight increase of 0.07 points, reaching 2,903 points. Market turnover, however, remained on the lower side. In the Treasury bill auction held yesterday, the government successfully raised 130 billion rupees. Notably, rates dropped by 56 and 42 basis points for the 3 and 6 months bills respectively, contributing to a unique reversal in the yield curve, with the 3 months rates falling below the 6 months rate for the first time in 18 months. However, the 12 months T-bill rates experienced only a 14 basis points decrease. On the tourism front, Sri Lanka Tourism Promotion Bureau is gearing up for a 1.5 billion rupees promotional campaign in 11 key markets starting in March, aiming to boost arrivals. Speaking of which, more than 120,000 tourists have already arrived in Sri Lanka in the first 18 days of 2024.